You are listening to The Vocal Technologist. Spoken Tech for your ears.
Welcome back. Today we're really cutting through some of the noise around financial markets and fintech. There's a lot happening.
Absolutely. Our goal here is basically to pull out the key insights from, recent reports and news, give you some clarity on the forces shaping how we're all going to bank and invest.
Okay, so let's jump right in. Disruption. We're hearing about some pretty, audacious moves. Peter Thiel, Palmer Luckey. Reports say they're launching a new U.S. bank.
That's right. And it's not just any bank. They're positioning it very deliberately as a rival to Silicon Valley Bank, the one that collapsed, aimed right at startups, VCs.
So filling a perceived gap left wide open.
Exactly. It looks like tech insiders responding directly to that market shakeup, building something hyper-focused. And you see similar strategic shifts elsewhere, like with Klarna.
Ah, the buy now, pay later giant was their move.
Well, they're really accelerating a pivot, moving beyond just BNPL to become more like a full digital bank. They're rolling out a US debit card with Visa, even mobile plans with AT&T. It looks like prep for a US IPO.
So it's about building resilience, not just being a one-trick pony, especially with regulations changing.
Precisely. It's a survival play almost, building a whole ecosystem. And speaking of regulation and strategy, Circle. The USDC stablecoin people.
Yeah, what about them?
Just days after their IPO, they applied for a U.S. trust bank license. Think about that.
Okay, a crypto-native firm wanting a federal trust bank license. What are the implications there? I mean, could that change things fundamentally?
It really could. If they get direct access to the Fed, that implies a level of legitimacy, integration. It's a potential blurring of the lines between traditional finance and DeFi. Huge.
Wow.
And while these big institutions are maneuvering, access is changing for individuals, too. Look at Robinhood planning to let European users trade tokenized shares.
Tokenized shares, like digital versions of shares in private companies.
Yeah.
OpenAI, SpaceX.
Exactly. Opening up pre-IPO equity access, which was usually off limits. But, it also brings up questions. Liquidity, oversight, how does that actually work in practice?
All right, lots of unknowns there. Okay, so we've got these big institutional shifts, new access points. But let's pivot slightly. What about us, the users? What makes us actually adopt these fintech tools?
Yeah, it's fascinating what the research shows. Turns out the biggest driver is just plain utility. How useful is it? That's number one.
Not necessarily how fun it is or if we're worried about money.
Less so than you might think, surprisingly. Social value, like what your friends use or recommend, that has a strong pull too. But utility is king, and fintechs are noticing.
How so?
They're designing products around sort of emerging consumer types. There are the reactors who get emotional about financial stress, then planners wanting control budgeting tools, and experiencers who value flexibility.
So they're trying to build these really personalized, psychology-driven experiences based on these personas.
You got it. Hyper-personalization. Trying to anticipate needs, not just react.
Right.
Which kind of brings us to buy now, pay later.
Ah, yes, BNPL. It just keeps expanding, doesn't it? A firm is moving into video games, digital content, chasing that younger online crowd.
Seems like it. And it's not just consumer stuff. Balance is partnering with Alibaba for B2B BNPL for U.S. businesses buying internationally, simplifying trade finance.
But with all this rapid growth, there must be more scrutiny, right?
Absolutely. And the regulatory side is catching up. New York, for instance, just finalized new rules for BNPL providers.
What kind of rules?
Clear disclosures, proper licensing requirements, stronger consumer protections. It's a definite sign the market is, maturing. Regulators are putting up guardrails.
So it really feels like this constant dance, doesn't it? Tech innovation pushing forward, consumer habits shifting, and the regulators trying to keep pace, all happening at once in finance.
It really is dynamic. And that leads to a final thought maybe for you listening. As financial services get ever more personalized, woven into daily life, how do you see that balance between convenience and privacy evolving? What new opportunities or maybe challenges does that create for your own financial future?
Spoken Tech for your ears.